We're very encouraged with our partner, 21 shares. I think we've crossed every T, dotted every I. We believe to the SEC's satisfaction. I think the messaging around the 29th is, look, if you're not going to be ready to go on or around, let's say, January 10th, then do not submit anything more to us because we have too much to do here. And again, that also is encouraging because it feels like a bit of that the SEC is setting a deadline for itself. So that's great.
We're now approaching a significant event less than 2 weeks away, widely anticipated to be a game changer for the digital asset space globally, both within and beyond the United States. This event hinges on the potential approval of a spot Bitcoin exchange-traded fund by the U.S. Securities and Exchange Commission. According to Cathie Wood, the founder, CEO, and CIO of ARK Invest, the January 10th deadline holds immense importance, extending beyond the typical expectations. It not only marks the final decision date for the SEC regarding ARK Invest's ETF application, but is also a self-imposed deadline by the SEC for all applicants. Essentially, the SEC is signaling that readiness by this date is crucial for approval, setting the stage for the launch of a spot Bitcoin ETF on or before January 10th. Cathie Wood, in a recent CNBC interview, emphasized the high probability, well over 95%, of approval by the SEC before the looming deadline. If approved, multiple spot Bitcoin applications are expected to be given the green light, attracting significant investments from renowned firms like BlackRock, Fidelity, ARK Invest, VanEck, Bitwise, and others. Wood anticipates that this development will mark a pivotal moment, transitioning the industry from predominantly retail investors to a preferred asset class for affluent institutional investors worldwide. In essence, the potential approval of spot Bitcoin ETFs is poised to initiate a lucrative era for the crypto industry, drawing substantial investments from institutional players and shaping a new landscape where cryptocurrencies become a favored choice for wealthy investors globally.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Biggest controversy, and this is in the press, but I'll highlight it because I think for most of us, it has been, wow, are they going to allow in-kind transactions? So, limiting the tax impact of transactions, or is it going to be primarily in cash? And I think, as has been reported widely, I think it's cash, not in kind, at least at the outset here. And I think there are just a few people within the SEC who are just somewhat concerned that banks will be forced to touch crypto. We're not sure they will be, but we're talking about something very technical. So to answer your question, yes, very technical. But that has been, I think, the big issue as we head hopefully towards a resolution. Well, I do think there will be repositioning for all kinds of reasons, but I do also believe that the SEC approval will be a green light for institutions who have been holding back. Now, we've had a big anticipatory move here. It wouldn't be surprising if we saw a sell on the news. That's an expression in the market. Sell it. You have a lot of anticipation, a price moves up. The event happens, and then especially fast trading organizations sell on the news. But beyond that I think will be just maybe a very short-term phenomenon. I think that the institutional push into Bitcoin will be quite significant to the price. In fact, in our price expectations going forward, the biggest contributor is institutions. As they move, they don't have to move very much in. They can move, there are trillions of dollars in assets to be allocated. If they just move in 0.1%, forget about 1%, but even 0.1 or 0.2%, that will move the needle, especially as we know, the number of Bitcoin outstanding right now is about 19.5 million. And the further that number, the furthest that number is going to go is 21 million. So the scarcity value as institutions move in will begin to move the price, we believe. As with any new ETF, it takes a while to educate investors, asset allocators, advisors about these new offerings. So slow as it goes, but the most important thing that's happening right now is, we're watching the plumbing, and the plumbing works. That's extremely important. 21 Shares is the largest pure play ETP crypto provider in the world, with roughly $2 billion in assets. So that has been mostly in Europe. This is in the US now. And so we wanted to make sure the plumbing works, and it's working beautifully. And I do think that a spot Bitcoin ETF will stimulate, once institutions and other investors have a toehold into the space, they will want ways to diversify. And so we wanted to be ready with those 5 strategies to help with actively managed diversification strategies. Some are lower volatility, some are more diversified with digital asset equities. So again, we're trying to be, shall I say, a go-to for anyone thinking about investing in digital assets.
Cathie disclosed ARK's strategic plan to introduce a range of innovative crypto-based exchange-traded funds, with the initial focus on their spot Bitcoin ETF. While the SEC grapples with nuances like in-kind or cash creation, regulatory bodies elsewhere exhibit greater openness to the cryptocurrency industry. Recent reports highlight Hong Kong's financial regulator, which has issued rules for spot Bitcoin ETF issuers, permitting the use of both cash and in-kind creation models. Interestingly, despite being perceived as more conservative toward crypto, the Hong Kong Securities and Futures Commission embraces both creation models, in contrast to the SEC's insistence on exclusive cash creation for Bitcoin ETF applicants in the United States. During the interview, Cathie also delves into her firm's strategic decision to divest its holdings in Grayscale Bitcoin Trust. Bloomberg analyst Eric Balchunas disclosed that ARK Invest liquidated its entire remaining GBTC holdings valued at $200 million. ARK Invest reinvested half of the proceeds, approximately $100 million from the GBTC sale, into Bitcoin Futures ETF. Cathie sheds light on the rationale behind this move and its implications for the investment firm.
Institutions don't want to bother with custodying and so forth. They want and tax issues and other infrastructure. They just want to be able to access quickly Bitcoin and other digital assets if we think longer term. And so if we're right, a spot Bitcoin ETF will be the most liquid way to access exposure to Bitcoin. And I think that liquidity and the ability to move in and out quickly is going to be important to institutions, because some institutions, yes, will be buy and hold. Others will use the ETF really as a way to play a new asset class. And they'll want exposure at times because the diversification increases risk per unit of, increases return per unit of risk. So I think they can't ignore it. And so this is a very good way to access it.
Looking at your activity at ARK Invest, you recently offloaded about $13 million worth of GBTC, so the Grayscale Bitcoin Trust. And I think you've been offloading for several weeks now, as well as $200 million worth of Coinbase shares. Tell me a little bit about the reasoning and the motive behind those trades.
Sure. Well, and this is portfolio management, essentially. So we've had both appreciate quite dramatically this year. This has been the best performing asset by far this year. And we always do take profits. It's just simple portfolio management. On top of the actual price appreciation of Bitcoin, we've had the discount closing relative to NAV for GBTC. So that's been, a double impact in terms of appreciation. So It's just traditional portfolio management.
What else is on your mind in terms of what's driving the direction of Bitcoin over the next year?
Well, I think something happened this year that will continue to inform investor decisions. Bitcoin appreciated during the regional bank crisis. So as the KRE, the regional bank index, imploded and Silicon Valley Bank went under, Bitcoin appreciated in the middle of that crisis, roughly 50%. And so we have a new role for Bitcoin, and that is not only a risk-on asset, but a risk-off asset too. Think about that. And why is it? It is because Bitcoin, unlike our banking system, does not face counterparty risk. It is completely decentralized and transparent by wallet address, right? And so our on-chain analyst, David Puel, can watch the network all day long and see movement and spot unusual activity. And we certainly saw that last year as Celsius was going under and others. It was Bitcoin that didn't skip a beat. So I really think it's proved its mettle. And that is informing institutions. You know, they may not have liked it at one point in time, but that regional bank crisis spoke volumes. Now, so we look at Bitcoin as a hedge also against both inflation and deflation. So think about that. We have a risk-on asset and a risk-off asset. It's a hedge against inflation, much like gold is, because its quantity is fixed out there. And then it's a hedge against deflation because of this notion of counterparty risk, not subject to it. So it's going to play a lot of roles in a lot of portfolios. And, you know, our forecasts are over 5 years, and over a 5-year investment time horizon, we do think that it will, for some people, take the place of physical gold. So that's a big mover. We also, as I mentioned, institutions will start with 0.1, 0.2, maybe going to 5% if our analysis is correct. That's what usually happens with a new asset class. And then we have the emerging markets. If you noticed, El Salvador and now Argentina, both of the presidents of those countries are supporting Bitcoin. And why? Because they've watched themselves and their populations, their purchasing power and their wealth being destroyed by bad monetary and fiscal policies in those countries. And that's not just true of those two countries. It's true elsewhere in the world. So we would not be surprised to see Bitcoin become legal tender in many more emerging markets. That will be another very big use case. And then related to that somewhat is remittances. You know, it's easy to transmit once people have wallets and understand how to do it. Bitcoin for little or no charge at all, whereas going through Western Union can cost 8%, 10%, 23% in Nigeria, of even $100 as families in the U.S. try and transmit or remit funds back to their families in emerging markets.
Cathie explores the prospect of the SEC greenlighting additional crypto-based ETFs. According to the CEO of ARK Invest, blockchain networks like Ethereum and Solana hold significant promise due to their status as smart contract networks. Cathie asserts that smart contracts will play an increasingly vital role as decentralized finance gains traction, predicting that both Ethereum and Solana will be instrumental and achieve remarkable feats in the upcoming crypto bull run and beyond. She invites viewers to share their thoughts on her insights, encouraging comments and observations in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.